So I was taking a class yesterday and talking to one of my clients, and when you really think about real estate, you could literally buy, save your money, borrow against your house, or if you're starting out as a new investor, you could literally buy buildings that you could do capital improvements to and then raise the rents and then raise the value, go back to the bank and borrow against that building and go do it again. So let's do an example. You buy a building and let's say that building will be $500,000. You do some upgrades, let's say it costs you about 100,000, and then you raise the rents and you realize now the building, you wait a year or so and then you realize the building's now 900 or $1 million. You could borrow that equity that you have in the building to go and buy other properties. If you do that enough and eventually grow your portfolio, what you're going to find is a lot of cash flow coming into your bank account.